Good day, everyone. I am Nikki Jane Aragones, and today I am going to present to you the financial statement of Petron Corporation, together with the financial ratios, and that includes the liquidity ratios, leverage ratios, efficiency ratios, profitability ratios, and market value ratio. Before I start, I am going first to define Petron and what is its history. Petron Corporation is the largest oil refining and marketing company in the Philippines and is a leading player in the Malaysian market. They have a combined refining capacity of nearly 270,000 barrels per day, producing a full range of premium fuels and petrochemicals to fuel the lives of millions of Filipinos and Malaysians. Leading through partnership and innovation, they power industries, drive economic growth, and fuel the future. Petron traces its rich heritage to September 7, 1933, when Soconomy Vacuum Oil Company of New York and the Standard Oil Company of New Jersey merged to form the Standard Vacuum Oil Company, or STANVAC. In 1957, Stanvac started constructing a refinery in the province of Limay, Bataan to meet the country's growing fuel needs. At the time of its inauguration in 1961, it had a refining capacity of 25,000 barrels of crude oil per day. At that time, this was the most modern refining facility in Southeast Asia. The end of Standard Oil and Soconomy Vacuum's partnership in 1962 gave birth to ISO Philippines. In 1973, the Philippine National Oil Company acquired ESO Philippines at the height of the first oil crisis and renamed it Petrophil Corporation. In February 1998, Petrophil was rechristened Petron Corporation. Amid the most difficult and trying times the country faced, including the Gulf War of 1991, Petron readily worked hand in hand with the national government. In April 2011, Petron Bataan Refinery celebrated its 50th anniversary with the launch of its upgrade project dubbed the Refinery Master Plan Phase 2. In 2017, the PBR, through its increased capabilities, maximized its 180,000 barrels per day capacity, attaining its highest utilization rate. This means that Petron will be able to supply the country's fuel needs, especially high-value segments, including petrochemicals. 85 years later, Petron remains dedicated and passionate about its vision to be the leading provider of total customer solutions in the energy sector and its derivative businesses. Now, let's move on to financial statement of Petron. First, we have the balance sheet for year ending December 2020 and 2021. We can see here the current assets, total assets, current liabilities, total liabilities, retained earnings, stockholders' equity parent, and book value per share. Next is the income statement, which gross revenue, gross expense, non-operating income, non-operating expense, income or loss before tax, income tax expense, net income or loss after tax, net income or loss attributable to parent equity holder, earnings or loss per share basic, and earnings loss per share diluted. Let us now compute the financial ratios. First, the liquidity ratio. For this, I chose current ratio. So what is current ratio? It measures a company's ability to pay off short-term liabilities with current assets. So this is the formula. Current ratio equals current assets divided by current liabilities. The current assets of 2021 is 188,035 and the current liabilities is 190,052. When we divide this, the current ratio of 2021 is equal to 0.99. In 2020, the current assets is 132,294 and the current liabilities is 149,069 and the current ratio is 0.89. In current ratio, the higher the resultant figure, the more short-term liquidity the company has. So when a current ratio of less than 1, meaning that indicates the company would not able to pay the short-term liabilities. As we can see here, the current ratio of Petron Corporation in year 2020 and 2021 is less than 1. So it means that the company was not able to pay the short-term liabilities. Next, we have debt ratio, which is under the leverage ratios. Debt ratio is measures the relative amount of a company's assets that are provided from debt. So the formula is debt ratio equals total liabilities over total assets. So the total liabilities of 2021 is 269,507 and the total assets is 407,420 and the debt ratio is 0.66. In 2020, the total liabilities is 263,530 and the total assets is 349,725 and the debt ratio is 0.75. If greater than 1, meaning the company has more debts than assets, and if the company has debt ratio lesser than 1, it indicates that the company has more assets than debts. So now, we got a positive outcome, which the company has debt ratio lesser than 1, and it indicates that the company has more assets than debts. Let's move on to efficiency ratio, and we will compute the asset turnover ratio. So asset turnover ratio measures the value of revenue generated by a business relative to its average total assets for a given fiscal year. So the formula is asset turnover ratio equals net sales revenue over average total assets. So the net sales revenue in year 2021 is 291,573 and the average total assets is 148,668.5 and the asset turnover ratio is equal to 1.96. In the year 2020, the net sales revenue is 286,033 and the average total assets is 155,891 with a asset turnover ratio of 1.83. The higher the ratio, the more efficient a company is generating revenue from its assets. Mostly, the industry average for this is 1.5 and we get higher than 1.5, so the company is more efficient in generating revenue from its asset in last 2 years. Let's go to profitability ratio and we will compute the return on assets. It is a measures the profitability of a business in relation to its total assets. The formula is return on assets ratio equals net income over average assets. So the net income in 2021 is 6,136 and the average assets is 407,420 in return on assets of 0.02. And in 2020, the net income is negative 11,413 and the average assets is 349,725 with a return on assets of negative 0.03. So this means that in year 2021, for every peso of assets the company invests in, it returns 2 cents in net profit per year and 3 cents in net profit per year on 2020. And lastly is the earnings per share ratio, which is under the market value ratio. So earnings per share ratio measures the amount of a company's net income that is theoretically available for payment to the holder of its common stock. And the formula is earnings per ratio equals net income over total share outstanding. The net income in 2021 is 6,136 and the total share outstanding is 103,588 with the earnings per share ratio of 0.06 and the net income in 2020 is negative 11,413 and the total shares outstanding is 79,772 with the earnings per share ratio of negative 0.14. The figure shows that in year 2021, the company is more profitable and the company has more profits to distribute to its shareholders than year 2020. So in my conclusion, year 2020 and 2021 was really a tough year to all of us, and businesses was very much affected on it. As we can see, some of the financial ratios mostly have poor outcome, but it doesn't mean that this computation remains the same. Roman is ang Petron president and chief executive officer said that the firm had been working hard to minimize the pandemic's impact on businesses. After all, Petron Corporation looks forward to a significant demand recovery and it plans to resume its refining operation by the second half of the year. That's all. Thank you guys for watching. God bless us all.